Hi guys, what's up? So today we are starting with a new topic which is called as group audits. Okay, so please come into your book. We are starting with a new chapter called as group audits. Now listen, if there's a company called as AB Limited, this is world's #1 company, branches all over the world, Nagaland, Uganda, Africa, Honolulu, Uganda, Paris, everywhere. This company has invested more than 50% of paid up share capital in another company called as Baby Limited. This is my wife ka company, AB Limited. More than 50% invested in Baby Limited. AB Limited. More than 50% invested in Baby Limited. This company is called as holding company. This company is called as subsidiary company. Subsidiary company. Right? So, by one way, when you invest, how much percent? More than 50% in another company. This company becomes holding company. This company becomes subsidiary company. This company becomes what? Subsidiary company. That's one of the way when you become holding subsidiary. Or if AB Limited controls more than half of board of directors of Baby Limited, more than half of the board of directors of Baby Limited, then still AB is the holding company, Baby is the subsidiary company. AB is the holding company, Baby is the subsidiary company. So you become holding and subsidiary by two ways. One, where you have invested more than 50%. Second, by more than half of the board of directors. Now, so what happens? It says Companies Act का section number 129. Section number 129 of which act, guys? Of Companies Act 2013. We call it Kaua 2013. Kaua 2013 means Kaua 2013. What it says? AB Limited, you will prepare your own FS. So AB ka FS will be prepared. FS means, sir, financial statement, balance sheet, P&L, cash flow, notes and statement of changes in equity. Balance sheet, P&L, cash flow, notes and statement of changes in equity. Baby will prepare its own FS. That's Baby ka FS. Now, so every company, AB Limited, you have to prepare your own FS. Baby Limited, you have to prepare your own FS. Now, every kid on this earth know. Every kid, बच्चा जानता है. What बच्चा जानता है? Every kid knows on the entire earth that AB and Baby का मिलन होएगा. मिलन means उनका that would be what? Consolidated financial statement. You must have learnt in your FR that AB and Baby ka consol should be prepared. AB and Baby ka consol should be prepared. Sir, who will prepare the consol? Holding company will prepare the consol. It is a duty of the management of the holding company, that is AB Limited. AB Limited will prepare consolidated financial statement. Now, that consolidation financial statement is prepared by the holding company ka management. Now, if you are the auditor, imagine AB ka auditor is CA Ram, Baby ka auditor is CA Bharat. AB ka auditor is CA Ram, Baby ka auditor is CA Bharat. Now, if you are the auditor of holding company, holding preparing consolidated financial statement, so now you have to prepare one more report. Hey Ram, Jai Shri Ram. You will prepare one more report, consolidated audit report. What will you prepare? Consolidated audit report. Sir, where it is written? It is written in section 129 that every company who has subsidiary, okay, who has associate, who has joint venture. Remember, subsidiary, associate, joint venture. I'll tell you one statement. Every company who have their own kids, the kids can be anywhere. Small kid, big kid, full kid, kid in India, kid in foreign. Like I keep on traveling to Chennai, Coimbatore, Ahmedabad, Delhi, Nasik, Nagpur, Jodhpur, Jaipur every 6 months. Now, everywhere I have investment. Yeah. Pogu people not understanding. Everywhere I have investment. Yeah. Somewhere I made subsidiary. How do you become subsidiary? Sir, more than 50%. Somewhere I made associate. It's a request. 1 second. It's a request. People who are watching at home, please use your earphone. Okay. If you invest, how much percent, sir? More than 20%. You become what? Associate. Sir, one kid means more than 50% subsidiary. Small kid means associate, more than or equal to 20%, minimum 20%. Full kid means 100%. Only on subsidiary. Sir, najayaz bachcha. Najayaz bachcha means what, sir? Illegitimate son. Joint venture. What it is? Joint venture. Sir, India kid means India subsidiary, India associate, India wholly owned subsidiary, India joint venture. Or foreign kid means foreign subsidiary, foreign associate, foreign joint venture, foreign wholly owned subsidiary. So, sorry, wherever you have kid, whether in India or outside India, so kid, small kid, full kid, illegitimate kid. ठीक है? छोटा बच्चा, पूरा बच्चा, नाजायज बच्चा, देश में बच्चा, विदेश में बच्चा. Wherever you have the kid, you have to do conso. Who will do conso? Sir, you have done the kid, right? So the holding company will do conso. Hey, holding company management has done the conso. Hey auditor, now prepare the report. What will you prepare? Consolidated audit report. What will you prepare? Consolidated audit report. Where it is written? Where? So section 129. Where it is written? It is written in section 129 of Companies Act 2013. Clear basics? Now let's read from the notes. So why consolidation? Consolidated financial statement is presented by a parent company. We in this chapter will say that as a holding company, as parent company. You can say holding company also. To provide the financial information of the group as a single economic entity. To provide the financial information of the group as a single economic entity. When they prepare their own FS, it is called as what? Standalone FS. That is information about single entity. Like AB preparing their own FS, Baby Limited preparing their own FS. Sir, what is consolidated FS? Information about the entire group. Like AB Limited consolidating with Baby. Imagine, I have 2 kids, okay? Santa and Manta. My associates. Yeah, 2 kids, tiny dots, Santa, Manta. So, you are consolidating the FS. It is called consolidated financial statement. Now, company consolidation as per Companies Act. Sir, if there is one or more subsidiary company, it should prepare the consolidated financial statement. When I say it should prepare, means holding company should prepare FS. I mean CFS. For this subsection, subsidiary will also include joint venture and associate. That means consolidation will be compulsory even if there is no subsidiary but have only associate or joint venture. So if I have any kid, small kid, full kid, India kid, foreign kid, you have to do conso. You have to do conso. The auditor shall verify that all subsidiaries, associate, joint venture have been included in the CFS unless they meet a criteria for exclusion as per Ind AS 110. I'll be teaching you. Generally, as per section 129, you have to do conso, unless they meet a criteria for exclusion as per Ind AS 110. Ind AS exemption will be doing it later on. Example, that is investment entity. We do it later on. Now, company shall also attach along with the FS a separate statement containing the salient feature of its subsidiary or subsidiaries in form number AOC1, like important features, like for example the turnover, the profit, the asset, the net investment. You have to inform to ROC in form number AOC1. Guys, AOC means accounts of company 1. Form number is what? Accounts of company 1. Then every company having subsidiary or subsidiaries shall also place on its website, okay, on its website what? Separate audited accounts of each of its subsidiary. Like AB Limited के website पे Baby का FS will be uploaded. Yeah, it is mandatory because see, AB Limited के members have invested more than 50% in their company. So boss, AB के website पे Baby का FS will also be uploaded, and provide a separate audited FS copy in respect of each of its subsidiary to any shareholder of the company who owns it. Like if they're asking for a copy also, like imagine holding company ka member is asking, I want to see baby ka FS, give them a copy. It should also be on the website, and you have to give a copy also. It's just a reading point, not an exam question. It's only for the basics. Like engine शुरू हुआ है अभी, engine खाली शुरू हुआ है अभी, तो गाड़ी चली नहीं है, time लगेगा. Whatever questions will come later on. Now, imagine, example, hypothetically, example. If in Baby Limited, AB Limited has invested more than 50% or paid up share capital of Baby Limited, so AB becomes the holding company, Baby becomes the subsidiary company. Who will do conso? Who will do conso? Sir, AB Limited. Clear? Imagine this is not there. If one more company is there, imagine SRK Limited, Shah Rukh Khan Limited. He controls more than half of board of directors of Baby Limited. More than half of board of directors of Baby Limited. So this becomes holding company, this becomes subsidiary company. In this example, SRK and Baby, who will do the conso? Who will do the conso? Sir, SRK. Correct? Because it has become holding subsidiary. Imagine, this is the picture. AB has invested more than 50%. SRK is controlling more than half of the board of directors. He is appointing more than half of the board of directors. Now the question is, who will do conso? AB will do conso, or SRK will do, or both will do, or none will do. Who will do conso? Both. Both the companies will have to do consolidation. Both the companies will have to do consolidation. See, if A Limited is proved to be a subsidiary of B Limited by virtue of shareholding and also a subsidiary of C Limited as per control over board. Okay, so if someone has invested or someone is controlling, then the problem arises that which company is liable to prepare CFS taking A Limited as its subsidiary. For this purpose, both B and C Limited, both company B Limited and C Limited will prepare CFS constituted of themselves and A Limited. That means they will do conso with A Limited. Clear? One company has made investment, other company has appointed more than half of both the board of directors, then both the companies will have to prepare consolidation. Both the companies will have to prepare consolidation. Clear this much? Easy it is. So all this is basics. All this is basic. Now, from here the answers will start. Main content. So I'll teach you this, then I'll give you time to read. Don't write right now. We'll be writing notes later on. Don't write. Now, section 129 क्या कहता है? Section 129 of Companies Act कहता है, it says, आपका बच्चा किधर भी हो, देश में हो, विदेश में हो, wherever your kid is, in India or foreign, you have to do conso. You have to do conso, you have to do conso, you have to do conso. There is no exemption. Always remember guys, there is no exemption, no exemption, no exemption. You have to do conso. This much is clear? Now, we are learning the exception. We are learning the exception of section 129. A Limited is there and B Limited is there. A has invested 100% in B Limited. A has invested 100% in B Limited. Who's the holding company? Sir, A is the holding company, B is the subsidiary company. Clear? Who will do the conso? Who will do the conso? Sir, A Limited. Clear this much? If B Limited has invested in C Limited, %51%. That's more than 50. Ideally, always remember the definition. It's more than 50. You become holding subsidiary at more than 50, more than 50, more than 50. B becomes the holding company, C becomes the subsidiary company. Don't write anything, I'll give you time to write. Hold on, first understand the concept. B becomes the holding company, C becomes the subsidiary company. Who will do the conso? Sir, B Limited. Clear? Again we do. If in the picture A has invested, imagine 100% or 51%, that's more than 50, okay? So either it is wholly owned subsidiary or it is a normal subsidiary, that's more than 50%, okay? For our understanding, I have taken the percentage as 51, but in the definition it is always more than 50, more than 50, more than 50, more than 50. अटका नहीं है, 3 बार बोला है. I have said it thrice, okay, purposefully. If A has invested more than 50 in B Limited, A is a holding company, B is a subsidiary. Who will do the conso? Who will do the conso? Sir, A Limited. If in the picture B and C is there, who will do the conso? Sir, B Limited. Again I do. If in the picture A and B is there, who will do the conso? A Limited. If in the picture B and C is there, who will do the conso? B Limited. If in the picture this is there, A, B, C, who will do the conso? Who will do the conso? Tell me. Holding company, subsidiary company, sub-subsidiary company. Who will do the conso? Ultimately, who will do the conso, sir? A Limited has done the conso. A Limited will be doing conso. That means who has not done conso? Who has not done conso? Sir, B Limited has not done conso. How will C do conso? C to conso is not there, na? Conso come when you have a subsidiary. C to does not have a subsidiary. That means B is not doing conso. That means B is exempted. That means, guys, B is exempted from doing conso. So it says B, if you want exemption, you have to follow 3 conditions. You have to follow, guys, 3 conditions. Again we do this, okay? Listen. If A and B is there, who will do the conso? Sir, A Limited. If B and C is there, who will do the conso? Sir, B Limited. If A, B, C, all 3 are there, who will do the conso? Sir, B Limited. Is not doing the conso, ultimately A Limited is doing the conso. So if B is not doing the conso, that means B is exempted. Guys, B is what? B is exempted from doing consolidation. So if B Limited wants exemption, they have to follow 3 conditions. First, B will take NOC from all the members or one member. Sir, NOC means no objection certificate. Sir, B will take NOC from all the members or one member. Now, when will the one member come? If A Limited has invested 100% in B Limited. If A Limited has invested 100% in B Limited, that means how many members B has? Only one, and that is A Limited. So you go to A Limited, I am not doing conso with C, okay? You have a problem? No problem, give me in writing. So A Limited will give NOC that if you are not doing conso with C, I do not have a problem. Or all members will come when? When A Limited has invested more than 50, that is basically 51, and 49 are other members. So you take the NOC from everybody. To the extent of 51, it is A Limited, and balance 49 are other members, right? So you take NOC from everybody that you are not doing conso with C, we do not have a problem. NOC means no objection certificate. And B is not a listed company. B is not a listed company or not wanting to get listed. Guys, B is not a listed company or not wanting to get listed. मतलब ना तो वो listed company ना उसकी कभी इच्छा है list होने की. इच्छा means like wish. There is no wish to get listed. It is neither a listed company nor it wants to get listed. And its ultimate holding company prepares CFS. its ultimate holding company prepares CFS. Now what is the ultimate holding company? Remember this. If you have Dadaji means the grandfather. If Papa is there, and if the beta means the son. Dadaji, Papa, beta. Okay, Dadaji, Papa, beta. If in the house, if you have your grandfather like Dadaji hai, so the ultimate responsibility of the entire house is with the Dadaji. So A Limited will prepare the consolidation, correct? But my Dadaji is born and brought up in Bangkok, like the company A Limited is in Bangkok. So to that company Act will not be applicable. So Dadaji will not prepare consolidation. So ultimately who will prepare? So then Papa has to prepare. If Papa wants the exemption, A Limited should be a company in India. So the ultimate holding company prepares CFS. Then the then the Papa is exempt. If Dadaji prepares the CFS, then Papa is exempt. Understood? This exemption is given only as per section 129. It says if A is there, B is there, C is there, that means intermediate subsidiary is there, you have to take NOC from all members or one member, and B Limited, you are not a listed company, not wanting to get listed, and ultimate holding company, that means the Dadaji prepares CFS. Dadaji prepares the CFS. Understood? Let's read this. It says, as per Companies Accounts Rule 2014, it says nothing in this rule shall apply in respect of preparation of CFS by a company if it meets the following condition. If it is a wholly owned subsidiary or is a partially owned subsidiary. If it is a wholly owned subsidiary means 100%, or is a partially owned subsidiary, that means more than 50% of another company, and all in other members, including those not otherwise entitled to it, that means everybody, having been intimated in writing, and for which proof of delivery of intimation is available with the company, that they have given intimation to everybody on this earth, they do not object to the company not presenting CFS. That means they will take NOC from everybody. And it is a company whose securities are not listed or are not in the process of listing. Neither it's a listed company nor it want to get listed. And its ultimate holding company, if ultimate holding company is there, or the intimate holding company files the CFS, that means the Dadaji prepares the CFS with ROC, which are in compliance with applicable AS. So you prepare the CFS. The Dadaji prepares the CFS, then B Limited, you are exempted. Then B Limited, you are exempted. Understood? So A, B, C, B Limited, if you want exemption, 3 conditions. NOC from all members of one member, and ultimate holding company prepares CFS, and it is not a listed company or not wanting to get listed. 3 conditions, then you are exempted. For section number, you always write Companies Act 2013. For rules, you always write Companies Rules 2014. Section is Companies Act 2013, rules Companies Rule 2014. Understood this much? We will be writing notes in the class, do not worry. First, I am giving you 5-7 minutes time. You will be reading the entire content. People who have received the book, they will read from the book. People who do not have the book right now, read it from the screen. Read. I'll be scrolling and I'm here only. I'm switching off the video so that you can concentrate and read it. Okay. And after 4-5 minutes, I will on the video. Okay. Read every content. Clear? Now, so we have done exemption from Companies Act. Let's do exemption as per Ind AS also. Okay, Ind AS. Now, that is written in point number 12, exceptions to consolidation. Now listen, you must have learned this in your FR. You must have learned this in FR, but again we will repeat it because again it comes in the exam. It says, if AB Limited has a business of doing what? AB sir keeps on traveling here and there. Har jagah I keep on going. Chennai, Coimbatore, Ahmedabad, Nagpur, Delhi. Right? My main business is to invest. Look up to the investee. Full bombard, perfect, kadak. Dalo. Investment karo, सीधा investment karo. More than 50. Okay, I'll definition is more than 50%. Okay, so I write here 55% in baby, in Katrina, 60%, 35% in Deepika. All these are limited. Baby limited, Katrina limited, Deepika limited. 40% in Rashmika. Yeah, I keep on investing. Okay. So more than 50% subsidiary. Katrina subsidiary. Deepika associate. Rashmika associate. Because my business is to keep on investment. 30 दिन में पैसा डबल. Lakshmi Chet Fund. I only do the investment. So my main company, my main objective is to keep on doing investment. I am an investment company. Now what will happen? In 1 year or 2 years, the money gets double. I will take exit. But the problem is 31st March. Every year ka 31st March will come. Now law says, oh, you have invested more than 50%. Subsidiary, do conso, section 129. Katrina, subsidiary, oh, do conso. Deepika associate, do conso. Rashmika associate, do conso. Boss, every company who has subsidiary, associate, joint venture, you have to do conso. But sir, my main business is investment only. My ordinary course of business is what? Investment, right? So I am an investment company. Ind AS 110 says. Ind AS 110, which is Ind AS 110 says. Ja Simran ji le apna zindagi. You don't do conso. You are exempted. Why? Because you are an investment entity. Because you are what? You are an investment entity. You are an investment entity. So an investment entity, if in the question it is specified, okay, as per Ind AS 110, guys, as per Ind AS 110, you will not do the conso. As per Ind AS 110, you will not do the conso. Which entity? Investment entity. Okay. But guys, AB Limited has a holding company. Mummy Limited. AB Limited has a holding company. Mummy Limited. Okay. That means AB ka holding company. AB to is exempt along with its subsidiary and sub-subsidiary. AB is exempt. But Mummy Limited, so Mummy Limited is in the business of selling laptops. Let's take an example. Mummy is not an investment entity. Mummy is in the business of selling laptop. So Mummy has to do consolidation. AB is exempted from doing conso. But Mummy Limited, the holding company, the parent company, has to do the conso. But if Mummy Limited also want exemption, Mummy Limited itself, Mummy Limited खुद भी what? खुद भी क्या होना चाहिए? Mummy Limited should also be investment entity. Mummy Limited itself should be an investment entity. Generally, the holding company, the parent company of AB Limited will prepare the CFS. But if Mummy wants exemption, Mummy itself should be an investment entity. Mummy itself should be an investment entity. Mummy itself should be an investment entity. Clear? Easy? Now see. As per Ind AS 110, an investment entity shall not consolidate its subsidiaries. Instead, it shall measure as per Ind AS 109. You must have heard of this word. FVTPL, fair value through profit or loss account, right? So it will be routed through Ind AS 109, that is FVTPL. However, its parent shall consolidate all entities. Its parent means AB ka parent means Mummy Limited, that it controls, including those controlled through an investment entity. That means AB Limited plus other baby, Katrina, Deepika, everything. Unless parent itself is an investment entity. Unless parent itself is an investment entity. Unless parent itself is an investment entity means if mummy wants exemption, mummy itself should be an investment entity. This exemption is given where? In Ind AS 110. This is not given in Companies Act. It is given only in Ind AS 110. What is the implication we will be doing when we do questions? Remember this. The exemption is as per Ind AS 110. Which entity? Investment entity. They will measure as per Ind AS 109 through FVTPL, fair value through profit and loss account. But its holding company is exempted. Its holding company have to do consolidation. If holding company wants the exemption, holding company itself should be an investment entity. Understood? Read this again along with the diagram. So diagram is here, explanation is here. 2 minutes time, guys. 2 minutes. Read from the screen. Clear? Now, so when we do consolidation, there are two exemptions. One is section 129 Companies Act exemption, the other one is as per Ind AS 110. This much is clear. Now, the entire chapter is as per auditor. So you have to perform procedure. Conso would be done by the company. Which company, sir? Holding company, parent company. Okay, they will do the conso. But as an auditor, you have to perform certain procedure. What are the procedures? So it leads to two types of conso adjustment. How many adjustment, guys? Two types of conso adjustment are there. How many kinds of adjustments, sir? Two types of conso adjustment. So the auditor should verify the adjustment which are warranted by relevant AS. Which AS is there? Ind AS 110. Have been made wherever required and have been properly authorized by the management of parent. So auditor, go and check whether Ind AS 110 is followed, whatever adjustments are there, it is followed or not. It will give rise to two adjustment. One is PCA. PCA means Permanent Consolidation Adjustment. Which adjustment, guys? PCA, Permanent Consolidation Adjustment. Number two, CPCA. CPCA means Current Period Consolidation Adjustment. One is PCA, Permanent Consolidation Adjustment. Second one is CPCA, Current Period Consolidation Adjustment. PCA and CPCA. Sir, what is PCA? वो पहली बार, the first time when we got baby at home. Yeah, when we invested in baby limited, Baby limited come to our home. First time. I call this like your Suhagrat. The first time, the first night. It is called as permanent consolidation adjustment. After that, okay, second year, third year, every year normal night. It is called as current period consolidation adjustment. When the first time you do investment in a company, and for the first year when you prepare consolidation, it is called as what? Permanent consolidation adjustment. Every year, you do adjustment, it is called as what? Current period consolidation adjustment. Sir, in PCA, when you do for the first time, or imagine, I have just invested 20% in baby. What is she? Subsidiary. Now I like her more. I made her she is associate. Sorry. She is associate. Now I like her. I invested more. 51%. What she became? Subsidiary. I like her more now. Full baby I want. Baby come, baby come. I invested 100% in baby limited. It became what? Wholly owned subsidiary. So guys, first it was associate, then it became what? Subsidiary, then it became what? Wholly owned subsidiary. Correct? So it says either on the first occasion or on subsequent occasion whenever there is a change. Either on the first occasion or subsequent occasion whenever there is a change in the shareholding, the adjustments what you make is called as what? Permanent consolidation adjustment. So these are those adjustments that are made only on the first occasion or on the subsequent occasion. First occasion when she became a subsidiary, or subsequent occasion like from associate to subsidiary to wholly owned subsidiary, in which there is a change in the shareholding of a particular entity which is consolidated. It is called as PCA, permanent consolidation adjustment. Sir, what are PCA? There are two PCA basically. The code is ECG. First, determination of equity attributable to minority, or NCI. NCI means, guys, non-controlling interest. If you remember in FR, your FR teacher must have taught you, like when you do 100 ka more than 51% and the balance 49%, that minority 49 is minority, or we call this NCI. NCI means non-controlling interest. So auditor go and verify determination of amount of equity attributable to minority, or NCI. Equity attributable to minority or NCI. Then determination of capital reserve or goodwill. Determination of capital reserve or goodwill as per applicable AS. Determination of capital reserve or goodwill as per applicable AS. CG. Capital reserve or goodwill. Either capital reserve will come or goodwill will come. The auditor should verify whether the pre-acquisition reserve have been allocated between the parent company and the minority or NCI. Between the parent company or the minority or NCI. Understood? 2 mark answer, 3 mark answer, 4 mark answer. What are permanent consolidation adjustment? So these are the adjustments which are made on the first occasion or on subsequent occasion whenever there is a change in the shareholding already held. Code is ECG. E. Determination of equity attributable to minority or NCI. CG. Determination of capital reserve or goodwill as per applicable AS. Determination of capital reserve or goodwill as per applicable AS. Then the auditor should see that the pre-acquisition reserve have been allocated appropriately between the parent company and the minority or NCI. You can definitely write in the exam in your own words, provided you cover each and every point. Every point should be covered there. Understood? This is called as what? PCA, permanent consolidation adjustment. Next, CPCA. Sir, every year what adjustment we make? It is called as what? CPCA. These are those adjustments which are made in the accounting period for which the CFS is made. Like every year basically, every year. Sir, what is the code? Guys, the code is if paise. In S there are 2 points, in E also there are 2 points. The code is if paise. Just remember your FR content, you will get it very easily. Here there is no illustration, there is no sum, it's pure theory. What you have to verify? Sir, I. Intra-group interest paid and received or management fees. Intra-group interest paid and received or management fees. Intra-group interest paid and received or management fees. Like if you have taken a loan from subsidiary, you are paying the interest. It is your current period adjustment. F. In case of foreign component. Sir, component means subsidiary, associate, joint venture, foreign. Like imagine if I have a company, my subsidiary is in Uganda. Where? Uganda. Are Uganda is a country in Africa. Yeah. I was subsidiary there. There people are like jingalala ho ho, jingalala ho ho, hukaka hookah, 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 hukaka hookah, hookah, hookah. Yeah. Very beautiful country, very beautiful people. So Uganda company, I mean the company in Uganda will prepare the FS as per which law? Uganda law. Uganda law. Now that subsidiary have to send the accounts to India because holding company in India, holding company will prepare the CFS. Bhaiya, that is in the Uganda currency, Uganda language. Sir, which language? Ugandi. Are Punjab, Punjabi, Gujarat, Gujarati, Uganda, Ugandi. So India walo ko to they will not understand anything. So you have to convert as per Indian language, Indian currency, Indian rules. It is called as Indian GAAP. It is called as what? Indian GAAP. So you will convert the accounts as per Indian GAAP. Basically, Ind GAAP we say generally accepted accounting principle. So it says in case of foreign components, adjustments to convert components audited FS prepare under components local GAAP. Under components local GAAP. Here one word would be added to the GAAP under which CFS is prepared. To the GAAP under which CFS is prepared. So in simple word we'll say GAAP conversion. In case of foreign components, GAAP conversion. That's implied like Uganda company will prepare accounts as per Uganda law. Then you have to convert as per Indian law. It is called as Indian GAAP. So in case of foreign components, GAAP conversion. Okay. P. Intragroup profits on assets acquired from subsidiaries. Intragroup profits on assets acquired from subsidiaries. Like for example, if I bought some stock, inventory, some asset, profit element would be there. You will be transferring here and there. It is current period adjustment. Now, some subsidiary may be following SLM method. Some would be following WDV method. Some would be following LIFO method. LIFO to chalo it's gone. Some would be following weighted average. Some would be following FIFO basis. But at the end, in Conso, everybody have to follow one method only. So you will harmonize. You will make it as one. Adjustments relating to harmonizing different accounting policy. Adjustments relating to harmonizing different accounting policy. I. Intragroup indebtedness. Very hot adjustment of FR. Intragroup indebtedness. Data creator. Intragroup indebtedness. S. There are two S. Adjustment for significant transaction between date of FS of parent and its component. Your FR teacher must have taught you one or two illustration where India may be follow 31st March. In foreign, they may follow 31st December, right? So my subsidiary is following 31st December, but we are following 31st March. So 3 months ka you have to do the adjustment and bring it to 31st March. So all the adjustments what you do for that 3 months, it comes in this S wala point. Adjustments made for the effect of significant transactions between the date of FS of parent and its components. Then adjustments to the FS for subsequent event. If you know what are subsequent events, after balance sheet but before audit report date. After balance sheet but before audit report date. Okay. So there are two events, adjusting and non-adjusting. Adjusting may what do? You create provision. Non-adjusting may you disclose it by way of note. All these are accounts ka concept, basic foundation inter accounts. Okay. Just remember adjustment for subsequent event. After balance sheet date but before audit report date. After balance sheet date but before audit report date. Then E. Determination of equity attributable to minority. Same point. Like when you close the accounts, the profit will come. The profit will be distributed between the parent company and the minority. So there is the same E wala point. Determination of equity attributable to minority. Determination of equity attributable to minority or NCI. And one more point is that if you can remember, adjustments for deferred tax on account of temporary differences arising out of elimination of profit or loss account. So you can remember this much only, adjustment for deferred tax on account of temporary differences. Adjustments of deferred tax on account of temporary differences. So remember if paise, this is one more extra point, adjustment for deferred tax. Adjustment for deferred tax. Okay. So guys, the code is if paise. If paise. See, when you're doing it for the first time, it looks like how we will remember. Every day I'll be playing KBC with you guys. Kaun banega CA. So you will easily remember this. Don't worry. So I. Intragroup interest paid or received and management fees. F. In case of foreign components, adjustments to convert local GAAP to the gap under which CFS is prepared. P. Intergroup profits on assets acquired from subsidiaries. A. Adjustment for harmonizing accounting policy. I. Intragroup indebtedness. S. Adjustment for significant transaction like 31st December between the date of FS of component and parent. One more S. Adjustment for subsequent event. E. Equity attributable to minority or NCI. One more point, adjustment for deferred tax. Adjustments for deferred tax. So we'll be scribbling, I'll be teaching a technique how to remember the content, because audit is all about remembrance, all about remembrance. Direct question comes for exam in the exam, 4 marks each. Explain PCA, explain CPCA. PCA means permanent consolidation adjustment, either on the first time or on the subsequent time, whenever there's a change. CPCA, every year you do, every year you do. Understood? We'll be writing everything, don't worry, we'll be writing. Giving you 5 minutes time, just go through once. Cool? Okay, now open your notes. We'll be making notes, we'll be writing stuff. Okay, now open your notes. We will be writing notes and I want everybody to write in the class itself. Don't skip it. And you will be hunting in the WhatsApp group or Telegram group. Please send AB ka notes, please send AB sir ka notes. Trust me, on the exam day, in 1.5 day, after appearing for your AFM paper, handwritten notes will only be useful because the content is huge. It's very huge. So how would you retain the content? Only by your handwritten notes, and you will not like my handwriting, you will love only your handwriting. The USP of me is only handwritten notes. People clear, people get good marks, people remember the content, people pass, people get rank, people get AR1 also. Only because of handwritten notes. So please write the notes. Okay. Now give the headings as group audits. Give the heading as group audits. Dash 4 marks to 8 marks. Dash 4 marks to 8 marks. Right, first point. Sorry, just write important notes. Don't make any point, just write important notes. In that, write first point. A parent company, first point, a parent company, bracket में write holding company, along with its own FS, have to prepare FS of its subsidiaries, in the same manner as that of its own. In the same manner as that of its own. Now, and dash write section 129. Dash section 129. Below that, don't change a point, right? Subsidiary will also include joint venture and associates. Subsidiary will also include joint venture and associates. Then point number 2, right there, company shall also attach company shall also attach along with its FS a separate statement containing salient features of FS of its subsidiary in form number AOC1 and in bracket write accounts of company. Then next note, right there, if a company is a subsidiary, by virtue of its shareholding, by virtue of shareholding, and the same company is subsidiary because of control over board comma, then both the companies will prepare CFS. Draw this example below that. What you see on the screen. Draw. Done? Okay. Now write question number 1. Exemption from CFS under Ind AS. Exemption from CFS under Ind AS. Yeah, first we're writing Ind AS wala point. Right there, first point. So do one thing, first draw the diagram, then we write. Draw this diagram. Done? Now write point number 1. As per Ind AS 110, as per Ind AS 110, comma, an investment entity shall not consolidate its subsidiaries comma, instead it shall measure it at fair value through profit or loss account as per Ind AS 109. As per Ind AS 109. Okay. Number 2. Right there. However, comma, its parent now copy from the screen from here, its parental investment entity, copy this same line, its parental investment entity, right. See, nothing goes off my father, simple, I'm telling you. In Hindi मेरे पप्पा का कुछ नहीं जाता. Understand and realize writing is very important. पेपर वाइवा नहीं है ना, ओरल एग्जाम नहीं है ना, इट्स इन राइटिंग, यू हैव टू राइट. जब तक लिखोगे तब तक याद होगा नहीं, इसलिए कह रहा हूँ लिखो. जो इसको फॉरवर्ड कर रहा है भगवान पाप देगा, मैं बोल रहा हूँ. Jesus Christ is watching you, he will punish you very badly. Right, copy. Finish. Now, question number 2, right there, exemption from consolidation, exemption from consolidation under Companies Act 2013. Under Companies Act 2013. Draw this diagram. ABC. Draw this diagram. Right here, Dadaji, Papa, Beta. Draw. I'm here only. Done. Question number 3. NOC means no objection certificate. Okay. Question number 3. Explain types of consolidation adjustments. Explain types of consolidation adjustments. Right there. Preparation of CFS. Preparation of CFS gives rise to two types of adjustments. Draw two arrows. Write A, permanent consolidation adjustment, B, current period consolidation adjustment. Now in that, write A. A, permanent consolidation adjustment. A, permanent consolidation adjustment. Now below that, these are those adjustments. These are those adjustments which are made on first occasion, or subsequent occasion, in which there is a change in the shareholding already held. Now below that, right, ECG, like this, ECG. Right, E, determination of amount of equity attributable to minority slash non-controlling interest, and in bracket write NCI, because now we'll be reporting NCI only. CG, write like this, determination of two arrows, capital reserve or goodwill, as per, then curly bracket, as per applicable AS. Determination of capital reserve or goodwill as per applicable AS. Determination of capital reserve or goodwill as per applicable AS. Below that, right, see one more point, next line. The auditor should verify that pre-acquisition reserve has been allocated appropriately between between the parent and NCI. Between the parent and NCI. Now B, right there, CPCA. CPCA. Right there. These are the adjustments which are made. These are the adjustments which are made in the year for which consolidation is done. For which consolidation is done. Number 2, following are the adjustments. Following are the adjustments. Dash. Following are the adjustment dash. If paise. If paise. Okay. Can you see on the screen if paise? You will be writing like this with the code only. I'll read for you. Intragroup interest paid and received. Foreign components, that is gap conversion wherever applicable. Wherever applicable. Intergroup profits on assets acquisition. Adjustments relating to harmonizing accounting policies. I, intergroup indebtedness. S, adjustments for subsequent event, that is after balance sheet date but before audit report date. But before audit report date. Before audit report date. One more as adjustment for significant transaction between the date of component and date of parent. E, determination of equity attributable to minority or NCI. If you want to add extra point, adjustment for deferred tax, or else if paise is good. Okay, copy this. This is from the last batch because the chapter was same. Copy. I am here only. Okay, copy. Done it? So we stop the class here. So this is the pattern what we're gonna follow. We will understand the concept, we'll read from the book, then we will write the notes, and we'll be doing it simultaneously, because remembrance, content, memorizing is important in CA final audit. Okay, so I hope you like the content, and if you like it, do recommend to your friends so everybody can buy the video. So this is a video which is common in Hindi language, English language for CA final, appearing for May 24 and onwards the time. It's an exam oriented batch, and you can contact the website what you see on the screen, www.letstudyindia.in, or 844-844-8919. So do recommend to your friends, guys. This is the same pattern what we wanna follow. Okay, bye guys, take care, enjoy, and aim for a rank or 70 plus, whichever is earlier. You'll be listening this in every session of mine. Okay, bye, keep smiling.